Welcome everybody to today's edition of Toggle's Daily Video Insights. For those of you who are joining us for the first time, my name is Jan. I'm one of the co-founders of Toggle, and in these videos we usually review one of the many insights that Toggle, the AI system, produces across thousands of US stocks. So if you'd like to see more of these, sign up at toggle.global or subscribe to our YouTube channel. You can also test drive Toggle Copilot, which is the system that is like a Google Maps trying to highlight potentially potholes and opportunities in the universe of many publicly traded US equities. The focus today is going to be on AutoNation, a company that probably many of you will have been familiar with, and we reviewed the latest insight that Toggle has produced, which is really one of seasonality. So what Toggle is actually highlighting is that at these levels over the following month or so, there's actually potentially quite a bit of positive pressure stemming purely from some positive seasonality that seems to be inherent in the price action of this particular stock. So in the overview, when you get here, you can obviously highlight the area itself. It will give you the target price at 98.26 and the stop loss level at 90.52, but clicking on the card itself will take you directly to the insight so you can actually see what it's all about. And as you can see here, based on 26 previous occasions or the past 26 years that the system was able to go back and analyze, there is actually a tendency for the stock price to rise about 5.5% over the following month. And as you can see here, with the starting point of 93.12, the median expectation would get that to about 98.26, with the confidence interval, of course, of allowing for a price to rise quite a bit more to 105. Again, what you want is the price to stay within this confidence interval, and if it were to dip below the red line, the odds are that something else is driving price rather than seasonality, and so it's time to reevaluate the thesis and potentially exit the stock itself. Now, why it might move, of course, you can just simply look back and see the analysis across all of these previous years that the system had looked through, and the back test will give you the answer of the quite an extraordinary skew that you really see in the risk of downside, which is clustered probably around 5%, a little bit less than that, and the upside occasionally being as high as 15%. So a pretty solidly 2-to-1 risk reward, you could probably say, just eyeballing it here. And you look at the past performance, you see that if you had invested $1 and reinvested it each time over these past 26 years, you would have actually ended up with some choppiness along the way, $5 of profit. So much for AutoNation today in the daily brief, which by now should already be in your mailboxes if you subscribe, and if you don't, you can do so at toggle.global. We also discuss what the new administration's economic policy thinking might mean for how macroeconomic lessons of the past are going to be treated. So we take Bidenomics under a little bit of a lens and examine its implications. So if you'd like to read more about this, please check it out on toggle.global and you can sign up there. In the meantime, thank you for your attention, and we'll talk to you again tomorrow.